All right.
Yeah.
All right. All right. Hey guys, this is Shaun Witriol. I'm gonna give you a brief presentation on introduction to options. I know a lot of you have been asking questions, and a lot of you are interested in learning about options. So I'm going to take about 15-20 minutes of your time here and just go over some of the basics of options, just so you have an idea of how to place a trade, what you're getting into, and what a simple buy and call is. Um, just to give you a rundown of my background, I have 10 years of experience in accounting and finance. My bachelor's is in accounting and my master's is in business administration. In the past, I've managed a tax practice. I've worked as an accountant in professional sports, worked at one of the largest firms in North America, and currently I'm a syndicated writer. I have an article published on millennialmoneyman.com, which is a site that's been on MarketWatch and the International Business Times. I currently write for alphagamma.eu, and I run my own blog. So if you're interested, take a look, sign up. It'll be good information for you. I don't post trades because of my background, but I do write about how to invest and how to maintain long-term wealth so you can maintain your profits. So starting off with options, it's important to understand what a stock is. And it's completely the other end, but what a stock is, it's a permanent ownership in a company, and there are two types of stocks. Common stock is what you trade on a day-to-day basis. It's the right to shareholder meetings, which means you have the right to vote. You have the option to vote on CEO, on board members. For example, if you had Apple stock recently, they just issued a voting proxy vote, and you could have voted for Tim Cook, and you would have found that people on the board are also up for vote as well. The most surprising person that I didn't know that was on the Apple board is Al Gore. So that's something that you only have the privilege to do if you are a shareholder. They also pay dividends. Preferred stocks are a little bit different. They are only offered at a certain time. They have a guaranteed dividend. They also have higher priority over common stocks. What that means is if for some reason a company cannot pay all of their dividend obligations, they'll pay the preferred stocks first, and then whatever they can pay, they'll pay the common stock. And then lastly, in the event of a bankruptcy, they are given first option to sell or to cover their assets. Now, an option is a temporary ownership of the stock. Each contract that you see is worth 100 shares. That's temporary ownership to a certain date. What that does, it's the right to buy or sell the contract for profit or shares. May sound a little vague, but we'll get more into it in a minute. They come in two different options, calls and puts. Calls is when the price will go up, and a put is when a price will go down. Put is similar to a short. So if any of you are able to short out there, it's similar to a put. So calls and puts. Risks. Buying a call or buying a put has limited risk. Buying one of these, you risk the amount of money you put in. So if you pay $100 for that call or put by buying it, if it goes the other way, you can only lose $100, which is the next step in many of your trading privileges. Most of you are a basic trader or just starting out, which is totally understandable. We all have to start somewhere. But your first step into trading options will be buying and selling calls and puts. They won't let you sell a call or a put because of the risk. When you see on CNBC or on TV how people start GoFundMe accounts because they went the other way with their options, it's because they sold a call on unlimited risk. It's also called a naked call, naked put. Selling a call is the opposite. So buying a call, you're hoping that the stock price will go up. Buying a put, you'll hope that the stock price goes down. Now, selling a call, the advantage to that is that it puts that money back into your account. So you can actually add money into your account and put that somewhere else. So if you have the option of buying a put for $100, buying a call for $100, selling a call may put $80 back into your account because of the spread. And the spread is the difference between the bid and the ask. So there's unlimited risk, and you can lose your entire account. Converting an option, you can either sell the call or the put for profit and just take what the option is worth, or you can exercise that option for shares, and I'll go more into that as well. Now, as we go through this, you also learn that volatility affects the pricing of options. It doesn't so much affect share prices, it affects trading value. Calculations. So I try to break this down for you to make it as easy as possible. The break-even point on an Apple stock when it's $95 or $105, and you'll see what I mean by those two prices in just a second. So let's say the option's listed as option for 100 at $1, expiration 315. Now these numbers are hypothetical, so let me break it down for you. The option for 100 means that the strike price is $100. That's what you want. That's what you want your stock to reach. And let's say it's $1. So that means that one option is $1 per every 100 shares. So you're going to pay $100 for that option. So anytime you see an option, remember it's the dollar or the decimal and digits after that times 100. We just kept it simple here, and we just used $1 and 100. So to calculate your break-even point in a call, because the price has to go up, you want your break-even point to be $101. So you want that stock to jump from $95 to $101, and that's your break-even point. Now, once again, volatility affects this, so just because it doesn't reach 101 doesn't mean you won't make money on this. A put is the reverse. Since you want that to go down, if that stock price is 105, you want it to reach $100. Now, the 100 minus the $1 is $99 as your break-even point. And same thing as before, volatility affects the value. Profiting from options. So going back to our example, Apple stock is 105/95, and I'll show you why I reversed that. Same option, $100 at $1 with the expiration at 315. The call, the break-even point we went over is 101, but here's where we figure out our profit. If the stock goes up to $105, we'll subtract the 101, which is the $100 plus the $1 cost of the contract, and that's a $4 profit, times the 100 shares in that contract is a $400 profit just on the contract. And what I mean by that is that you have commission fees, you also have contract fees, so that can be anything from $6 up to $12. So this is just your revenue, not your net revenue. Your put is the reverse. So it's 100 minus 1 is your 99 break-even point, which we went over. Now, from $99 to 95, it's the same thing. $4 is your profit. $100 shares in that contract, which leaves you with a $400 profit minus your commissions. Exercising. So this is probably the most unfamiliar term to you. Exercising an option means you convert the shares into, you convert the option into shares. So when you close out your option, they will give you two options to the option. You can sell for profit and just take the money, or you can convert that into shares. And I'll show you why that is a great aspect to this. It's another incentive to purchasing options. So going back over the call, just so we understand, and I've also learned that over time, as you reiterate, it becomes a foundation in your thought process, in your memory. The $100 for the strike price plus the $1 is your break-even point. The 105 is what the stock reached, minus your 101 is a $4 profit on the contract, times the 100 shares in that contract is a $400 profit. Now, if you sell that, you get that profit. If you exercise that option, you would get Apple shares at $100. So let me make sure that you understand that. The stock on the market is 105, but because you bought that option with a strike price of $100, you get Apple shares for $100. So you immediately make a gain on those shares. It doesn't work as well with the puts because you want the price to go down. So it's really just a way to hedge your portfolio, which I didn't get into in this because that's a whole other aspect of it, and I didn't want to confuse you too much because most of you are, when you start, are going to be buying calls because that's the easiest way to start off. It'll just help your understanding as you go on. To put a trade in, each platform is different, so I didn't want to include pictures. The trade, you pick out your symbol and you go to options, just like any other trade. Then you select your date. Now you'll notice how many days to expiration will be listed on the side. The most common one is a 30-day option because they're relatively cheap, and if you know where it's going, it gives you more time for that option to develop. It's a little bit less risk, but it's also a little bit more expensive. One of the things that I've learned in my trading history is that weekly options are high risk. You don't know what's going to happen because of volatility, but you can often get a 30-day picture on a stock. So whenever I teach people about trading options, I always recommend 30-day options. Start off with one contract. This way you're not risking too much. This way if you lose that, but you also learn what to watch for it, and it gives you a 30-day window where you are completely involved. The strike price is what you want it to reach. So in a call, if that stock is $95, you would want the strike price as close to $95 as possible for profitability. So in that same stock of Apple at $95, I would recommend a $96 option. For the example, I used 100 to keep it round so you would understand it. But the strike price of 96, as soon as it hits 96, it's immediately profitable. So there are different variations to the time value of money and volatility, and that is something in more advanced options that I can go over. I didn't want to confuse you. These are the most basic things for you to understand. As you're placing the trade, you can either do a market order or a limit order, just like regular stocks. The advantage to the limit order is that you can actually put a price in that's lower than what it's listed as, and you'll probably get it. If you put in something and it's trading for a $1 option and you put in for 75 cents, you're probably not going to get it. But the advantage here is that you may be able to put in 95 cents to that dollar instead of paying $100 for that contract, pay 95, which immediately gives you a benefit on the commissions and the contract fee. So if that commission and contract fee is $10, it'll take it down to a $5 cost right off the bat, and you're entering into the trade if it's already at that price at a $5 gain. After you enter that, review, send. It's just like any other trade. You'll have a committed, and then you'll have a fulfillment. And then lastly, a few ways to contact me. You can always reach me through my website at www.shaunwitriol.com. You can reach me on Facebook on my facebook.com/Shaun Witriol blog. Connect with me on LinkedIn. I share tons of information on LinkedIn. It's an easier way to get a hold of me. I like keeping everything separate, so just look for me by name, linkedin.com/in/Shaun Witriol, and you can always email me at shaunwitriol.com. No, Jacob, I can't see the Q&A. So let me get out of this.
All right.
And get back into the hangout, and then I'll answer some of your questions.
Jacob, do you want to start on the psychology, or do you want me to?
You go ahead.
Sounds good.
Go ahead and set the tone.
All right. I'm going to use Word to kind of give you guys a visual aid for some of these psychology, like trading, the mentality of a trader, I guess you could say. So there's 4 big main emotional rescues is what they call them, and the first one is hope, which is I sure hope that this goes up after I buy it. There's fear. Okay, so these four are the main four. They call them emotional rescues, and what they are is I've personally felt every single one, and I think Shaun and Jacob can both say that they've felt every single one. So there's hope where you're thinking, I sure hope that this goes up after I buy it. And I say this with every stock that I buy, and half the time it goes red after I buy it. So there's like the hope mindset where you hope it goes up. And a lot of the day traders and swing traders that are super reputable and profitable, they're going to tell you that you never hope. It's always an indication thing, which I'll touch here in a second. There's fear where there's I can't take another loss, and I've felt this too. After my big loss on XGTI, I didn't trade for a good month just because the mindset I was in. I was in a mindset where I just can't take another loss. So that's one to watch out for. But all the professional traders want to go against fear. They don't believe in fear. They believe in no emotional trading, kind of like Clay Trader. And then there's greed, where I'm already making so much, I'm going to double down here. And usually what happens after that, the stock goes down. It goes the opposite way because they're in that hope mindset again. They're thinking, wow, I'm getting lucky on this trade. I'm already up so much. I'm just going to double down and I'm going to ride this out and make even more money. And then there's despair, where this trading system isn't working for me. And I think this is the main mindset a lot of us have been in lately with the bear market that's hitting us right now, especially with that last Disney thing. I think a lot of people were upset about that. But there are a couple more. So here's some, like, those are kind of like the emotions, and then here's like actual effects of these emotions that I hope this can give you a visual aid. I have some notes that I'm writing from, so sorry. So there's a thing called loss aversion. It's the tendency for people to have a strong preference for avoiding losses over acquiring gains. And this usually goes, it's an absolute preference for avoiding losses rather than acquiring gains. For most people, losing $100 is not the same as winning $100. However, from a rational point of view, the two things are quite literally the same. They both represent a net negative change of $100. And I did a little research, and it actually suggested that losses can have as much as twice the psychological power of gains, which is definitely true, I think. And in terms of trading, loss of aversion affects one's ability to follow mechanical trading systems, because the losses incurred in following a system are felt more strongly than are the potential winnings from using that system. So that's saying the mindset of having a loss during a more technical trade is more hurtful than having a loss in general, just because a lot of technical traders use the technicality of the chart or the SMA line or something like that, and that seems to statistically proven to cause them more despair. So then there's the sunk cost effects, where it's the tendency to treat money that already has been committed or spent as more valuable than money that may be spent in the future. So the tendency, So the sunk cost, like I said, it's the tendency to treat money that has already been committed or spent as more valuable than money to be spent in the future. So I think this is one of the psychological mindsets that traders don't even know they're in when they're in it. Because I guess in business, sunk costs are costs that already have been incurred and cannot be recovered. So for example, an investment that already has been spent on research for new technology is sunk cost. The sunk cost effect is the tendency for people to consider the amount of money that has already been spent, the sunk costs, if you will, when making decisions. So an example that I found online is, say the Acme company has spent 100 million developing a particular technology for building laptop displays. Now suppose that after spending this money, it becomes obvious that an alternative technology is much better and more likely to produce a desired results in the required time frame. A purely rational approach would be to weigh the future costs of adopting the new technology against the future expense of continuing to use the developed technology, then make a decision solely on the basis of future benefits and expenditures, completely disregarding the amount of money that has already been spent. So it's to put that in like stock related terms, it's if you're already in a stock and it's starting to go down and you have an unrealized loss and you see another stock that you potentially would have bought and you see that that's going up, you're more likely to sell your current stock for a loss and then buy into that new stock where it almost doubles your chance for a loss there where you could have ridden the first one out, right? So a lot of people do that without even realizing it. Then I have one more real quick. It's called, sorry, I'm going through my notes here. It's the outcome bias. I apologize. I should have had all this together for you guys, but I've been running really late tonight, so I'm going on the fly. So the outcome bias causes people to put too much emphasis on what actually occurred rather than on the quality of the decision itself in trading. Even a correct approach can result in losing trades, perhaps a few in a row. These losses can cause traders to doubt themselves and their decision process. And they can evaluate the approach they have been using negatively because the outcome of that approach has been negative. The next bias makes this problem particularly acute, which is it goes with the outcome bias. It's called the recency bias, and it's the tendency for individuals to place greater importance on more recent data and experience. A trade that was made yesterday weighs more heavily than due trades from last week or last year. 2 months of losing trades can count as much as or more than the 6 months of winning trades that happened previously. Thus, the outcome of a series of recent trades will cause most traders to doubt their method and decision-making process. So an example I thought of when going over the recency and outcome biases is you're sitting there, say you've had 4 losing trades in a row. You have your next 6 winning trades and they only make up for those 4 losings. It's going to take a lot more, generally it's going to take a lot more winning trades to make up losses for the losing trades. And all of these effects, the outcome bias, the sunk cost effects, loss aversion, they all go into this despair and fear category up here. They all make a trader say, I don't want to trade anymore, this is ridiculous, I can't make money, and they turn away from trading, right? And then I have one more thing which I'm not going to write down because it's generally obvious, but it's called the bandwagon effect or the herd effect. And everyone's always said, oh, you're hopping on the bandwagon AMDA, but the bandwagon effect is partially responsible for the seemingly unstoppable increase in prices at the end of a price bubble. People who fall under the spell of the law of small numbers believe that a small sample closely resembles the population from which it is drawn. So that can sometimes cause big upticks or big downticks in stocks. It's AMDA having a spike because there's a bunch of people hopping on that small spike buying the stock, or there's going to be a small drop and a bunch of people are saying, oh, it's tanking, and they're just going to hop on the bandwagon to sell their stock. And those are kind of the main trading mindsets that traders can have in the day trading and swing trading world. The long-term trading is a lot more patience, really, and fundamental research and trading, but that's just about all I have tonight for psychology. So Jacob, if you want to hit yours, and then we can do any questions or anything else at the end.
Yeah, I can't hear you.
Hello?
Yeah, I can hear you.
Oh, there we go. Okay.
So basically, my biggest issue is the loss aversion.
Yes.
And I'm definitely more nervous of losing. I'm trying to go to my charts, and just being hesitant. Being hesitant can kill you, and it all comes with basically all that stuff. Being hesitant, whether you're buying or selling, either one of them can kill you. Not necessarily kill you, but kill your account. Like, for instance, today, I hesitated because this was such a low float stock, some ELND. Can you see that? The chart?
Yes. Yep.
All right. So I had a morning flag form up right here at 283. And as I was going, I hesitated for like half a second to hit the buy button. And of course, it ripped right under my nose. And I basically had a whole day of doing that. And a big thing that isn't good after having a bunch of missed opportunities is over trading. Do you ever overtrade, John?
Yes.
Yeah. Basically, I missed all these opportunities today, and then and then
Whoops.
and then later on during the end of the day, I tried to find a stock that I could get in that would basically make up for missed opportunities, and I come across this one, which was flagging up at the end of how like my triangle setups. And I basically got in here, and it wasn't really doing. I got in right here, and it started bringing down on me, and I sold out. And then I tried to get in right here, and we got right here, and it wasn't doing anything. So I sold out even with all this volume. And then of course, when I sell, goes back to your loss aversion. I had this. I mean, it wasn't much, but it was. Yeah, I basically lost like $1. But I could have gained a couple bucks if I'd have just waited, held on to it for a few minutes. But instead I lost. Took a really small loss on it. So bandwagon. Pretty much all of the points that John just outlined can all be fixed. The best way to help that is to find a strategy and stick to it. I mean, really, if you create your own rules, creating the wrong rules to trading and sticking to them will probably be better off than just going in it with no rules at all. It's not the best advice.
Exactly.
So like just joining any group and you hear tickers thrown out and you just get into anything and you just start jumping in on it. That's what I did when I started. I joined. Go ahead. Were you about to say something?
No, I'll say it after you're done.
Okay. I joined this group called I think it was stockhaven.com back when it was free. And I just basically started jumping into a lot of the stocks that I heard about and ended up losing. And then I took a big loss. Like you said, your big loss with, what was it, XGTI?
Yeah.
I took a big loss on Ford, not the motor company, but their ticker was FORD. And I think I talked about this. I think I talked to you about this last week. It was right after AQXP had ripped from like $2 to $50, and I thought that was going to do it again. And this was a few days after that, and it went from $1 to like $4, and I bought it like $4, and it basically fell out from under my feet, and I sold, and I bought it the high day, and sold for like a $300 loss, which isn't much to a lot of people, but to me psychologically it was pretty bad, and I basically took like the year off from trading, and yeah, it really got to me. I was like homicidal like the rest of the week. But trading will do that to you. I'm not even playing. But basically the key to surviving is creating a strategy, coming up with a strategy, and sticking to it. That's about my 2 cents into
I totally agree with that. Like you said, new traders. I was so lucky to find Riley Knight and her group, but without that group, I could tell you right now I wouldn't be where I am today, like education wise and like trading education wise, you know, like, and I wouldn't have all my money in my bank account. It'd be in someone else's pockets, I'm sure.
Yeah.
But going back to that, you were saying how you didn't pull the trigger to get in any of these trades. I had going back to the loss aversion effect, it affects you and you don't even know it's affecting you. Here's the chart for dust today, and I bought in end of day yesterday at 7:35, and I noticed gold was down today, and obviously pre-market it was higher than its previous close, but right here I saw it and it was running and it ran fairly quick. It had a high of like it was like 829, yeah, and then on this little morning spike its high was like 811, I believe. And I saw it hit 811. I was like, man, it might go a little higher. It might go a little higher. It might go a little higher.
Yep.
I watched it come touch down this 8-line mark, and I sold halfway down here at like 797 or something. And it was a good trade because it was still profitable. But the thing that got me is I could have bought this dip and then made this next spike. You know, it's just like, man. But that happens to everybody, and the thing is, it's just all about timing your entries and exit, you know. So like in comparison to this, what I've been using to compare the chart with is a stock called JNUG, and they go, it's like positive gold, right? And you can obviously see how these stocks, they're the same, they're just flip-flopped, right? So every time JNUG is up, dust here.
Yeah, dust is down.
You know, so that's what I've been using for that indicator for the dust trade I've been doing.
Kind of like whenever I want to play TVIX or any of these inverse ETFs, I use the Dow to trend it. I missed the trigger on dust yesterday, right here at 646. I was about to buy, and then it printed this big candle. See, that's the thing. Like, if a stock spikes like that, even right up here, I'm not gonna buy because I'm just feel like I'm chasing. But as you can see, even if I got in, I would still be pretty profitable because it turned pretty good to the upside of this neckline.
Yeah, lately in that case, when I buy like big green candle like that, I'll have a super tight stop, like maybe 5 cents below even, and if it hits it, I'm out with a super small loss and I play it safe, and if not, then I'll make that gain. But half the time that candle's still fluctuating up and down for that tick, and it usually hits my stop every time, and I watch it go back up, which is kind of sad, but another thing. And then George was saying like what stocks, like charts to use in their inverses. like Jacob said, this TVIX chart here, you want to use the Dow or an index.
Yeah. Basically, those ETFs, they're either going to trim any of the indexes, or they're going to inverse it.
Yeah.
So like it's really good opportunities, because like when you have such a choppy market, like you got the Dow swinging, 300 points one way one day and then 300 points the other way the next day.
Mm-hmm.
Basically, it really gives you opportunities to play these ETFs, because I mean, if the Dow's going to decide to swing to the upside, you can either short like TVIX, or you can play long, you can go long ETF that trends the index.
Yeah.
I'm going through word salad right now. I cannot get words to come out of my mouth. Yeah.
Do you want to touch on your scalping thing for George real quick? I was interested in that.
Yeah. So basically, I have these 3 patterns, and it's the same pattern basically, but the 3 different patterns go on time frame during the day. So like I have what's called an AMF pattern, which is the morning, which the AM stands for the morning, and then the F is for flag. Basically, I normally find stocks that have news, and they're up pre-market, and basically when the session opens, you'll have a run up, and normally it'll dip because some people are taking profits from their overnight trades. And pretty much a test of that line is a pretty bullish signal. This was an awesome example that I had the other day. Just one of those opportunities I missed. I could have been up like $500, which would have just been awesome.
Wow.
And any break above this, a neckline like this, you can pretty much expect a decent run. I mean, I'm not going to say they're going to run every single time, but you can expect some move to the upside. And I think that one I was talking about a minute ago that I missed the trigger, I think it was E. Hold on real quick. Let me find it. ELMD. This pattern can be really small too. Not to mention, I mean, 3 candles right here was basically the AMF flag right here, and then it ripped to the upside. Also, I have an NF pattern, which just is a noon flag. Anytime, it's basically when you have a flag that forms up after the first hour and a half or so of the day. So like this one broke out at like 11:20 or so, and had a nice gain to the upside. Basically, it basically fails the AMF right here, and then flags over, and then around noon it'll break out, and that's usually good for a scalp. But you don't really find these noon patterns, because most traders and investors are at lunch, and you have a volume, a lot. You don't have as much volume during lunchtime. And my last one is a PMF pattern, which is the afternoon flag. I traded one of these today. It was the one I showed where I was trying to overtrade. These are the most common one is the AMF pattern, because in the morning is when you have all your movement during the day. So basically, if you have an AMF flag up or form up, and it breaks out, a lot of times you'll see a flag over the whole day and then a high day break, which is what I was hoping for with PAGP today. And it broke out, but it just didn't run that much, even though it had the highest volume over the whole day that it had all day. So I was a little disappointed in that. I was really hoping for at least like 620. I think the high was like 607. It's quite upsetting. Anyways, but like right here at the beginning of the day, you have basically, it's not pretty, but you have this AMF pattern form up, and you have the test, and it breaks out. Then over the whole day, over the entire session, it'll flag up and then break out. That's those are risky plays, because as you see, it's already up pretty decent over the whole day. So you never know when the sell-off could be coming. Like, I'm probably expecting a dip on this tomorrow, but I'm not gonna play it anymore. It's pretty much dead to me.
Yeah.
That's about the gist of my 3 intraday patterns. What was your beating the bid and ask theory?
In this book I was reading here, I'll try to give you guys another visual aid. It's kind of a little confusing, but so where am I at? So say you have a stock like XGTI where recently it hasn't had a ton of volume on it. And we'll say the bid is 0.191. The ask right now is 0.199. So this book I've been reading, it's called The Way of the Turtle, and it was about a guy in New York that was part of this turtle group. There were 10 traders that learned from 2 millionaire traders. They just that was their thing in Wall Street, and this was in the 90s. But one of the systems they learned was called bid scalping. So say you have XGTI with a bid of 191 and an ask of 199 or 0.199, sorry. What they would do, they would put a bid, a fishing bid is what they call it, of say 0.192, right? So it's already beating that 0.191 bid, and they would be using enough capital where they could liquidate it fairly quick, and they would be using not so much that it would be hard for somebody to sell them all those shares at that price, or they wouldn't be using enough where someone's gonna look at level 2 for say and beat that bid of 192, if that makes sense, right?
Yeah.
So they'd have a fishing bid of 1.92 or 0.192, sorry. Let's say they've got 20,000 shares at 0.192. So let's say the ask now changed to 0.2 for kicks and giggles. So now they'd have 20,000 at 0.192, right? Now they're just gonna switch or turn that around, day trade it, and sell it at 0.2, or not 0.2, it would be 0.199. So there's there's 0.07 of a profit for each of those shares, right? But their idea for this system was it's safe, it's relatively safe on a low moving stock that's not highly volatile, and it'll eventually add up for big profits, right? So let me hurry and do the math here for you. I need a calculator because I can't do that in my head. So that's 140 bucks, right, of profit, where it's a relatively safe trade. It's not a whole lot of profit, yes, if they waited for some kind of spike or something. But one, they didn't lose on any of those trades. They had like a 90% success rate on these bid and ask scalp trades. They'd have such a low profit, but the guy said he turned $10,000 into $25,000 in 6 months by purely scalping stocks just on their bid and ask. But the problem is finding the stocks to scalp, if that makes sense. And it'd be especially hard in the market right now just because most of everything's moving so much up and down wise because of just the situation we're in here. But
Yeah.
that's the bid and ask scalping procedure, which I thought George was talking about, because I don't know if I'd consider scalping like a swing trade. I'd call that like a hold, you know, just a short-term hold, because I don't know, that's me though.
Yeah, scalping is like anywhere from 2 minutes to like a few hours or so.
Mm-hmm.
I wouldn't even call It
I'd call
depends.
it, if it's longer than a day trade, I wouldn't call it a scalp. You know, if
Yeah.
you're holding overnight, it's not a scalp. Scalping, I'd say, and I think a lot of people would agree that it's just you're taking small profits right off the top. You're not holding for a fundamental catalyst or a
Yeah.
technical breakout or anything like that. So
Yeah, and scalping, I think it mainly revolves around, like you said, you're taking money off the top. You're not getting the full move.
mhm.
Like, I mean, I do that a lot on accident. Like, let's see if I can show. Basically, like right here, like I would be scalping this if like I got it right here and like sold right here. Like as you can
Yeah.
see, it ran higher, but you didn't take advantage of the full move. Basically, is my idea of scalping.
hmm But yeah, I think when George asked that, when he said that like what inverses of stocks can I find to go like with stocks, I think finding those stocks you just want to play commodities that have an inverse, which all of them do. I even saw like an inverse of pork today, like Shaun was talking about last week, how you could
Yeah.
buy literal pork meat. I found an inverse of pork, and the stocks looked like the dust and JNUG trades that, or charts that I had up there a second ago. I'm trying to find this breakout signal. Have you ever heard of man, hold on, hopefully I can find it here. Something breakout. I think this is what you're using with your triangle things. 207. Dang, dang, dang.
While he's doing that, I'll answer the question we got about what's the best way to get rich. You basically go to your local psychic and ask them what stock they think is going to go from 50 cents to $200,000.
That's
Buy a
me.
couple shares.
Kidding.
I saw there was a stock today that did that.
It was
It started with Z or something.
Z. Oh, no, I got a penny stock alert. I'm gonna hurry and look this up. I can't remember what it was for. It was like Sino or something, but I never went and looked at it. I just alerted it in the group.
But no, I'm seriously. There was a stock. I showed it to my friend today. It went from like 57 cents to 100,000. It went basically to $200,000.
What?
Yeah.
Was that
See if
on
I can-
trades or was it like a reverse split or something?
I don't even know. It
Yeah,
was
so
crazy.
this, oh, sorry.
Go ahead.
This is the stock I was alerted for today and looked like it did move quite a bit at market open, but settled down here. Sorry, go ahead.
I'm gonna try to find that stock.
Trying to find this breakout thing. This dang notes I have.
Here we go. It basically is ZWZZT. Oh, I see what it is. It's a NASDAQ test stock. I don't know what that is.
Oh, that's weird.
Yeah, I've never even heard of that. Yeah. See if it's tradable. Yeah, look at this. Let's see if I can. It wasn't even a candle either. It was a dash from here at basically 40 cents all the way up to,
Wow.
right under 200,000.
It's crazy.
I don't think you can trade it.
No, I'm gonna look up and see what those are. That's interesting. I found the thing I was talking about. It's the ATR channel breakout, and in this it says the ATR channel breakout system is a volatility channel system that uses the average true range as the volatility measure, and the channel is formed by adding 7 ATR to a 350-day moving average. So I have no idea what that means, but it looked really interesting. It said their success rate with that system is like 60+% by using that. So maybe next week we can go into like Bollinger breakouts, channel breakouts, the dawn chain trends, stuff like that. But that's all I had for tonight. I don't know if that's all you had, Jacob, or
You want to? I just had a thought. You want to talk about what you're watching right now,
the what?
or what are you watching right now?
On like
stocks.
stock-wise?
Yeah, what's on your watch list?
Sorry, I'll tell you. Let me bring up my Robinhood. I bought 4 stocks today, like very small amounts of shares. So I'm just kind of goofing around, but JD alerted one. It's OHRP I bought in.
Yeah.
This stock looked pretty good on that after I checked it, like JD said. And I'm in ATVI. I'm going to hold through earnings tomorrow after hours for the heck of it. And then I'm in PSEC, PSEC, and ETE. So ETE is interesting because
I was looking at that today for a scalp, basically.
Yeah, I think this is the one that had a hard drop recently. Oh, nice, it's up after hours. Didn't notice that. Yes, this is the one that had a hard drop recently. So the 52-week low is $4, so it's $1.25 off its low off the close here, but I'm just hoping it goes kind of climbs back up and kind of corrects itself as being oversold. So
Honestly, I don't even. It's kind of sad that I don't even load my watch list into my Thinkorswim. Basically, check to see where it's at the end of the day, and if it's like near my neckline buy trigger, then I'll put it on. Put it front and center. See, screen share. I'll show you my 5 triangle breakout. Right here we got A and Y. Where it seemed to be consolidating under $2. Looking for it. It tested it yesterday. No, basically we're just waiting for that to maybe bounce off the EMAs or the moving averages down here and see a test back to $2. CLF it wanted to break out a few days ago, but it didn't. So I'm just keeping it on the watch list. Under $2 again, $2 roll. TCK ticked me off today. TCK had a great day. It had a great day and then gave back all of its gains. Let me show you. I alerted it for red to green. This was one of those I missed out on. One of those opportunities that I missed. Basically formed an AMF right here at $4. Broke out at 403 and ran all the way to 430. So just under a 10% move. And then it closed red on the day. Nice. So it's just like, well, freak. We'll just keep that on the watch list. Eunice, I'm putting that back on the watch list. It broke out from my $1 alert, went all the way to like 125, and then broke down to
Eunice.
It had bad earnings, I think is what happened. And now we're trying to get the dollar roll.
I can't remember where I saw Eunice. Look at that chart.
It had some news come out. It has a deal with Amgen. It
yeah.
It also had it got upgraded by some analyst, and the guy I follow on Twitter, basically where I learned everything about stocks, Cameron Foos, he was pumping it pretty hard, or I wouldn't call it pumping it, but he was recommending it. He was accidentally pumping it, and but yeah, we dropped it back down to just over 80 cents, and now we're testing $1 again, and VMEM, just looking for the dollar roll, just like Eunice. So you have a lot of whole dollar rolls going on in my watch list. But
nice.
Yeah.
So when you're looking at your triangle breakouts, like that chart that you have up there right now,
right?
Or can you pull up a chart real quick, just any? Do you
Yeah.
just, that horizontal line, is that based off of like recent resistances?
Yeah. This isn't a good example because it's consolidated under here and it hit it here, but it broke out here, so that doesn't, it does count because it crossed the line, but it doesn't really count.
Yeah.
Um,
Well, it looks like it used that line as a support too, about halfway in the chart. One of those
Yeah, right
candle
here.
lines kind of goes through. It didn't rest on it, but
Basically, you can draw these trend lines of where it hit, but is basically whole dollar rolls. Whole numbers are a big support and resistance level. Basically, that's the case for all of them. Like these two won't break out over $2, but when they
yeah.
do, I'm expecting a run at least back to 3. Because it has resistance right here at 350. So if we see a healthy break above 2, kind of right around 210, if we can get above that, we might can see at least a test of 250 where it was at last time.
So does that work with, it wouldn't work with like charts that are based off of commodities, right?
I'm sorry, can you repeat that? My roommates are just screaming.
That method, would it be able to use on like commodities or no? Probably not, right? Since they move with commodities.
As far as daily charts are involved, so we'll look at TVIX. It can, like,
It'd probably be a little harder, right? Because they
it is.
fluctuate with the market.
Yeah.
All the other stocks do, but it's so minimal. But where like TVIX, UVXY, Dust, things like that, it's like
Well,
they move
basically,
substantially.
I basically use these triangle breakouts for any candlestick chart. You don't use candlestick charting, do you?
I do, yes. Well,
Okay.
I don't on my mobile, but if I'm ever trading on desktop, I do.
Like basically right here, we had a triangle form up for the Dow, and after that, things are looking pretty bullish. Right here, he's it.
Yeah.
If I can ever get the lines drawn. Once we got above 1680, we were trending up pretty good. Basically, as far as those triangle patterns that I alert on my blog, those are normally swing trades. Well, they are and they aren't. They're good potential for swing trades, but a lot of times I just end up scalping them. But I usually those are good for you can follow those for swing trades. Basically, if the Dow is trending to 13 EMA like it did right here, as you can see right now, we're just kind of chopping around it, and things were especially hectic right here when it was trending below. But I'm hoping we can get a break above it again here pretty soon. A correction, kind of like it had back here after that August tank. I'm hoping we can hopefully form up another triangle. As you can see, it kind of already is want to form up a triangle. Hopefully we can see a break above 1660 and get back above it, and then hopefully things will be looking pretty green back up to highs up here in the 18. But I mainly use my intraday plays for the commodities and the ETFs. But yeah.
Is this, can you see my screen?
Yeah.
How do I use this dang horizontal line? There we go. See, I don't even know, where would I put the horizontal line on this guy?
What is that? ATVI?
Yeah, Activision.
That is what time frame is that?
It's 30 minutes, 20 days with 20 days with 30-minute ticks for the candles.
Okay, let's see. You could probably put the line. Well,
There's
as you can
support
see,
right there.
what was support broken down on
Yeah.
is again there's resistance right now at $30. Yeah. At $30.50. But I normally only use these triangle patterns, these flag patterns, on daily charts and minute to 2 minute charts.
Oh, really? So you don't use them on bigger charts like that?
Not really. Like, for example, if I was, watching this, if I would have ever come across this, things like right here, I'm basically speaking, past, stuff like right there, and then a brick above would be kind of in my, like OHRP, you were talking about that. I remember looking at that a few months ago when it formed up.
So what's your time frame and your ticks on your charts? Just 1 day, 1 minute, or?
There, for those flag patterns like the AMF, the NF, and the PMF, those are 1 minute, like 1 day, 1 minute, or 5 day, 2 minute. Basically, to see the action that's happening right now, and then I'll have the daily charts, which is like 6 months with day candles or 9 months with day candles. Like each of these candles right now is a whole day.
So obviously that's resistance and support.
Right there at 250 on your chart is our resistance.
That's a steep triangle.
What is this, AMDA?
Yeah, I'm just goofing around here.
Yeah.
So obviously it touched that support right there for 230 and it touched it right here again. But it looks like at the end of the day it just broke through that. Yeah. Actually, no, it bounced off it right there and then broke through.
And then, yeah.
And then it looks like the next support after that, or the big one at least, is 220 maybe?
Yeah, it looks like it. And then down there at 205-ish, 204-ish. Yeah.
It's crazy.
Yeah, see, I probably would have. See, like, my, can you hear me?
Yeah.
My, basically, I don't normally like these patterns that form up. Like, I'm not going to get in until it prints above it. You know what I'm saying? Like,
yeah,
as you can see, it touched the line a few times, but as soon as it ticks above it, I normally set a limit order for like 2 cents above the neckline, just to ensure that it is breaking above the line. You know what I'm saying?
Yeah.
See, like right here, it tested the line, but if I was, looking to play this, I would have never got in because it never broke 250. Yeah.
But would you, I mean, obviously on that triangle that you have, it bounces off the triangle a couple times.
Right.
If you had a triangle like set up from that first and second touch midway through the triangle, would you play it?
What I've got in like right here?
Yeah, off it bounced?
Maybe. I've honestly thought about that so many times. Like today with PAGP, my roommate was in here watching me trying to trade this thing, and he was like yelling at me like, "Why are you getting in at the dip?" And I'm like, "That's not my strategy." And we're basically having a yell fest right here in my bedroom. And I've honestly thought about it, but I don't know. It's definitely a possibility.
Yeah, because the other day, Monday, when I played AMDA, on those dang freaking Robinhood charts, I drew an imaginary trend line off the, it would be a trend line up, right? I didn't have a horizontal line, but I watched it hit that trend line. It started curving up. I bought in at that, and I had it super tight stop. But right after I did that, it jumped like 20 cents, and I made a decent profit on a super small trade,
Was that yesterday?
It was Monday. So wonder if I can pull this up with you.
I got you.
And it had a higher high of day there too. It kind of pulled back after that. It was probably about 10:30. Where are we?
I didn't trade Monday. That's why I don't remember.
I think it was right there in the middle of your chart.
Right here.
Right about there.
Yeah, I would have alerted.
Yes, it was. So if you can draw like a trend line, an imaginary trend line about on that middle uptick, maybe. Wonder if I can pull it up
Right
on
here.
my guy here.
Yeah, I would have probably, if I'd have been watching this, I would have probably alerted this for a PMF breakout
Yes.
from
Just like
294
that.
to 305. Yeah, that would have been a scalp, definitely.
Mm-hmm.
And once it broke down I would have been holding, hoping for, the moon, as everyone does with AMDA.
Yeah.
But once it
dang.
broke down to 13 EMA, I'd have probably got out, because that 13 EMA is a big indicator.
Yeah.
That's like my I live and breathe by that.
It's at 2:05 after hours. I noticed that. That's crazy. Oh. People are sad that they have to wait for their their FDA a little longer.
This is crazy. Like, I just don't get. I've never attached myself to a stock like that.
Yeah.
Like, even when I first started, I was, cycling through them like there was no tomorrow.
Mm-hmm. Every time I've played a stock fundamentally, it screwed me over. Like AMDA back before it happened.
I cannot hear you. Say something.
Can you hear me now?
Yeah.
Oh, okay. Where couldn't you hear me last? What was I talking about?
We were talking about trading the stock fundamentally and it not working out.
Oh, so I was waiting for AMDA for their FDA submission.
Right.
And I just held it, and this was before RS, it was in like October. And I held through a $200 gain, and I was like, man, it came immediately back down. And I just wrote it down with everyone else on the bandwagon. And that's the thing. I bought into AMDA because I was on the bandwagon. I was in XGTI because I was on the bandwagon.
Yeah.
Yes, XGTI, I made a profit on one of the trades, and it was one of my like bigger profits, yeah. But then everyone's like, oh, they're gonna have another sell of their stuff, and we all hopped back in, and it tanked. It tanked big and hard. Like 60% of my value was just gone. And it's just one of those bandwagon things. But I'm staying away from penny stocks now. Like penny, like under $1, I think is what I won't even play anymore, just because I've been hurt one too many times, and they move too much percentage-wise to not help make a profit at all.
Yeah, KBIO is still trading. I know this is random.
I heard it was actually.
I'm trying to pull up the chart, but it's not loaded.
I read an article that it was trading at like $2. Oh, it changed to KBIOQ. Yeah, 216 with 8,000 volume today. So it must be a stock where they can only trade if you're a shareholder now. Delisted.
Yeah, believe it or not, I tried to make profits off so many trades technically.
Mm-hmm.
And the first oh my god, the first profit I ever made on anything was on Fitbit when they released their first earnings. And I was like, holy crap, I just made profit fundamentally. And I'm like, what is life? And, but as you can see now, and my mom has hassled me ever since. She was like, ever since she was like, you should have held your stock in Fitbit. I was like, she was like, you'd probably be rich by now. I'm like, no, Mom, no. If the $1,000 that I put in it, if I had it right now, would be worth about 200. I was
Yeah.
like, it doesn't work like that. Just because everybody has one doesn't mean their stock is doing good.
Yeah. It's funny you say that because whenever somebody at school's like talking about stocks or something, they're like, buy into Apple or
Yeah.
buy into Netflix or something, you're going to be rich in a couple of years. No,
Yeah,
you're
no,
not.
no,
You
you're
know,
not.
they've already seen their big runs.
Oh yeah.
There's nothing going for them anymore, you know, and especially like kids like, oh yeah, I want to buy into GoPro stock because in years down the road they're just going to be $100 a share
Oh
or
yeah,
whatever. And it's
definitely.
like, no
Like,
way, because they're only selling one dinky little camera with accessories. What else are they going to do unless they have like some sort of partnership, you know? It's like,
yeah, there's a guy on Twitter. He shared a link, and the link title was why has GoPro stock dropped so much? And he commented on the post. He said because camera on a stick. And I was like, that is so true. Um, but if you can see my chart right here, basically I sold my Fitbit shares at the high that it's been in a year, and I don't even think it's been a stock for a year yet. But the highest it's been yet is where I sold mine.
wow.
So, but I didn't. I wish I'd have bought it bought the IPO because that'd be up like $20 a share.
Yeah.
Anyways, but like just like this with in GoPro, I think GoPro is really eating doo doo.
It has.
But yeah, so I got in my business class last semester. And the teacher asked, does anybody in here own any stock? And I was like, I'm sitting there thinking, no, I just sold it this morning. But and a kid raised his hand, and they were like, what do you own? And the dude was like, Netflix, Apple, Starbucks, and I'm like, have fun with that. Maybe you'll gain 10% in 2 years.
Yeah.
But
And 10% in 2 years isn't bad to some people, but I think
yeah,
a lot of kids don't understand, you know. They don't know what causes stock prices, you know.
yeah.
They
Well, the
just
general majority of anybody doesn't. They're not informed about penny stocks. You know what I'm saying?
well,
Like,
I read a statistic the other day, I guess like 90% of America will never or has never known what like a stock is, like besides just stock, you know. So
yeah,
it's like there's 10% of people in America that know what it is, how it works, and stuff like that. But
yeah.
I thought that was a little interesting.
That's definitely true because like when I first started 3 years ago, basically I was YouTubing how to get rich. And I come across that guy I've mentioned a bunch of times, Cameron Foose. He had a video on YouTube that said how to buy a penny stock before it triples and make 25 grand. And I was like, yeah, let me check this out. And then I started looking into it. I didn't even know how stocks worked. I just knew that there was a stock market and people made money off of it. I didn't even know what it was.
Mm-hmm.
Like, and I started looking into it. And like a week later, I was creating a broker account, thinking I was going to get rich off of $15. Like, no.
Yeah.
But I mean, I always felt like I had a knack at it because the day after I funded that account with $15, I was watching this stock, and the next day I bought in. It ran like 20%. I made $2.
Mm-hmm.
I made $2 off the whole position, and pretty much the $14 round trip wiped out my entire account. Like I had like $2 left, and I was like, well, everybody told me about brokerage fees.
Yeah.
Thank God for Robinhood, though.
Yeah, I love Robinhood now.
Yeah. I mean, a lot of people think that I don't know, they don't have a professional, a lot of people don't think they're professional, but they really do have a good thing going for them.
They do. They're definitely aimed at new traders though.
Oh, yeah.
you know, but I don't even mind that because it protects me from all those like SEC rules and stuff. Like
Yeah.
I don't have to consciously be aware of that 24/7 when I'm trading.
Yeah. But like, I don't like. I probably, if I had the capital, if I had like anywhere over like $10,000 or so, I probably wouldn't be with Robinhood.
Yeah.
Just because I like trading on computer.
Hmm.
I like click and buy and sell on the computer. It's like a guy said, you know, what's the difference in trading on your in buy and sell on your desktop versus on the phone? He said, would you haul lumber in a smart car versus in a truck? And I do get that feel with Robinhood. About just trading on your phone. But I think Robinhood should definitely, they should set like, or they should recommend, they should recommend setting like loss stops. Like if you lose so much of your money in a day, they should cut you off.
Yeah.
That would definitely save a lot of people.
Do you know when Instant's coming out, Robinhood Instant?
I don't. I know the beta's out and some people have been testing it, but I really don't. I'll be glad when it does.
Yeah, that'd be nice.
Yeah. All right, dude.
All right, man. Well,
See if anybody else has a question. Oh no, just the guy that wants to know how to get rich.
all right. Well, thanks for watching this video if you've been with us from the beginning, or if you watch it on YouTube later after it's posted.
Yeah, guys, appreciate it. Hopefully, if you missed this one, you can watch the replay or catch us on the next one.
Here is our contacts where you can find our websites, and we're both a member of the Wolves Trading Company group on Facebook, and Jacob has his blog, and I believe he's working on another site that will be released. So
Yep, PierceTrades.com. I'll be glad when I can take the blog spot out of that.
that'll be sick.
Yeah.
That's cool. Well, that's where you can find us, guys. If you have any questions, leave them in the comments below in YouTube or get a hold of us. I can put our emails down here just for reference in the YouTube video, just in case. What's yours?
PierceTrades@gmail.com. Lowercase everything, but I mean, it doesn't matter. I don't think. Does it matter for Gmail?
I don't know. I don't know. So, our emails. So, that's all we got. Have a good night, guys.
All right, peace.